The Reserve Bank wants a lower dollar. Let's have a look. Hello everyone, Florian.heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee and let's have a look at this article from Yahoo Finance, originally from Bloomberg, discussing the RBA sees the dollar fairly valued, but would prefer it lower. It would prefer it lower. Now, before we go through this, let's jump over here and let's talk about a few things. This is the Trading Economist. This is the Australian to US dollar current exchange rate. We're at 73.27 cents. Now, let's jump out to, hang on, we will go to 25 years. And we can see here, remember everyone, remember when it was over $1 US? Remember that? Back in 11? Look at the GFC, how it plunged down to 70 cents. Oh, sorry, down to 62 cents. And back in 01, we were at 48 cents. Remember that? Showing my age here. Showing my age. One of the interesting things is about this time, this is when we bought a Kickstarter for a laser cutter. We wanted to get a laser cutter to make models. And it took so long, we ended up getting a refund and we made money because the exchange rate went down and we purchased it in US dollars. That was good. That was a good investment. But nonetheless, I mean, look at that jump. Look at that recent jump there. From our low of about 60 cents, we're now at 73. So the RBA wants it lower. Now, there's a few things to consider. So if we jump over here, this is the Observatory of Economic Complexity. And one thing I harp on over and over again is the lack of complexity in Australia's economy. But that's not really the point here. Oh, kind of it is. Kind of it is. What do I use it for? I would say financial research, we'll say. So we can see here, these are our exports that Australia makes or sends overseas. Coal is a big chunk of it. Iron ore, a huge part of it. You got gold. You know, Australia's one of the biggest, I think the biggest gold exporter in the world. Petroleum and a few other things. A lot of natural resources. We're a quarry, you guys. Australia is a quarry. If you add on to that also, you know, things like international tourism, big chunk of our economy, and all that money that brings to retail, education, the impact that has, particularly international students. So the value of our dollar is quite important, particularly for these natural resources. So we jump back here. Let's have a look. We'll have a look here. We'll go to commodities. We'll go to commodities. And we can see right now iron ore, when I bring it up, come on, Florian, you can find it. Here it is. It's US $127.50 a ton. So that's actually doing really well, guys. Remember, it was down at, $80 at one stage. Now, the federal budget here in Australia, it's based on $50 a ton, which we haven't seen since 2016 because, well, the government derives revenue from a lot of these mineral export companies and a lot of the royalties that some of the states receive. So that's what they've budgeted it on for. So this is doing, good for us, good for Australia. Now, Australia, so with the dollar, if it were to go lower, in comparison to the US and other currencies, if it wasn't to be as cheaper to get Australian dollars, then a lot of these goods, which, well, were probably priced in US dollars, but nonetheless, it would be cheaper for our exports. It would be cheaper for our exports. But all of our imports would cost a lot more. And look at what we're importing. Broadcasting equipment, computers, packaged medicine, gold, refined petroleum. All of these things would cost more. Petrol. A big portion of it's imported, everyone. If that were to go up, that would have a flow through to the other parts of the economy over the longer term. Now, where are we exporting and importing to? Now, our biggest export partner is China. We can see here, they're number one for Australia, and this is 2018 data. Now, the top product we export is iron ore. We're only 11th the way back. The top product from China to Australia is computers. Over $3.9 billion worth of computers have come from China to Australia. Now, look at the economic complexity comparison. China has a much more advanced economy than us, much more complex. They're making much more advanced products and services that we use. Our GDP, we're 13th in the world. China is second in the world. We can just see some of the other figures here. And if we have a look here, exports from Australia to China, you can see this is pretty much, it just reads like our exports and imports, guys. 44% of our iron ore is going to China. We can have a look. Oh, no, sorry. 44% of our exports to China are just our iron ore. That's why Western Australia is so dependent on China. And this is why a lot of people, when they're investing in currencies, will use the Australian dollar as a proxy for the performance of the Chinese economy. They'll see it as a proxy for the Chinese economy because we're so in bed, we're so tied up to China, our currency seems to really, punch above its weight on a global stage. So there we go with that little bit. And this is the Chinese perspective of Australia. Their exports were the 11th destination for their exports. And, their products, as I said, computers. So let's jump back and have it with that understanding. Let's look at why the RBA would prefer. They're saying the dollar's fairly priced, so they probably are not going to intervene in the market because they can do that. The Reserve Bank can do, the interventionist, they can intervene to influence the price of our currency. But they'd prefer it to be lower. So Australia's central bank said the appreciation of the currency was consistent with higher commodity prices, particularly iron ore, while providing no indication that additional monetary measures are imminent. While members noted that the Australian dollar was broadly aligned with its fundamental determinants, a lower exchange rate would provide more assistance to the Australian economy in its recovery, the Reserve Bank of Australia said in minutes of its September meeting in Sydney on Tuesday. Now, here's the other thing you have to realize. Another part of investment here in Australia, just the little part, is foreign investment in our property sector. And I've shown this chart several times. The black line shows how much, during the big apartment boom, was driven by foreign investment. Nearly 100% at one stage. Now, we can see here another quote. I'll bring up this one from Matt Berry, pretty much highlighting how large a proportion of GDP growth in 2016, so 67% of our GDP growth was from Sydney and Melbourne, and a quarter of that was from an apartment building frenzy just in Sydney. So we can see here as well, if the dollar is lower, all of this property is more affordable. And what's the government pushing for at the moment? What's their solution to the economic issues Australia are facing? Same old, migration and foreign investment. The currency advanced after the release as the central bank reiterated that it would continue to consider how further monetary measures could support the recovery without suggesting it was poised to do so. The Australian dollar traded at 73 cents at 11:57 a.m. in Sydney from 72.73 just prior. The RBA this month announced an expansion of its lending facility for banks and signaled a renewed willingness to explore additional measures to support the economy. GDP contracted by the most on record last quarter, officially pushing Australia into its first recession in almost 3 decades. The Australian dollar has soared more than 27% from a low on March 19, the day the central bank announced emergency measures that included cutting the benchmark interest rate to 0.25 and setting a target rate for the 3-year yield on government bonds at the same rate. Under the RBA's increased term funding facility, banks will have access to additional funding equivalent to 2% of their outstanding credit at a fixed rate of 25 basis points for 3 years. Banks will be able to draw on this until the end of June 2021. The change brings the total available to around $200 billion. One byproduct from increasing the facility is that should banks find firms aren't willing to take out loans, which is possible with the economy in recession, they can use the funding to buy government bonds. RBA is coordinating with the government's stimulus program by purchasing bonds to keep borrowing costs down across the economy. The central bank has sought out $63 billion of government securities since it initiated the bond buying program. Public sector balance sheets in Australia were assessed as being strong, the RBA said. In an environment of record low borrowing rates and significant spare capacity in the economy, this meant fiscal policy was well placed to continue to support the recovery. Both the government and central bank are focused on bringing down unemployment that probably rose to 7.7% in August, economists predict ahead of data on Thursday. The RBA expects the jobless rate will reach 10% by the year's end. So, there we have. So what do you all think, everyone? What do you think? Looks like the RBA isn't going to intervene, but you've got to remember, they want this lower dollar. What will happen? I think a lot of it is dependent on foreign demand for iron ore. Will China pull Australia out of this recession? Will they drag us out? Will we get a repeat of the GFC? Will the old trick of more migration, more investment, more property purchases work again? We'll have to see. As always, thanks for watching. Please like, share, and subscribe to the channel. If you're a fan and want to support the content I created, there are a few ways you can. You can join us on YouTube or Patreon. Support us using our affiliate links. Use PayPal. Take care, guys, and I'll see you next time.